Okay, good evening, those arriving and audio turning on. We're going to give it a minute or two to let the rest of the folks joining us get settled in, get their audio connected. Definitely say hello as you can hear me. Let me know. You should be able to see the screen. You should be hearing me. It's good to see everybody as we progress into 2024. I saw press asking about some trading signals today. You can see why we're a little bit wanting to be patient, right? Why we're talking about how much confirmation do we need? Because the signals are there. It's very close. I feel like we'll have some things to be talking about. So looking forward to that. Sandy posted that she received her book, Reminiscences of a Stock Operator. Fantastic read. I'm be interested to hear your insights after you've gone through that. Hi, Perry. Good to see you. Okay, we're going to give it just about another minute. It looks like everybody's audio is going. Looks like we're good to go here. And we're about to jump in. Okay. Can everybody else hear me? I'm a little concerned. No one else is saying anything. Give me a quick shout out to acknowledge that your audio is connected and working and we're ready to go. Yes, indeed. All right. All right. Oh, yes. I've got Stephen, you came in through Q&A. I saw it barely. But I would definitely say, I don't know. Do we want to do chat Q&A? Yeah, let's do chat. I would move over to chat. And we'll go from there. All right. Welcome out, everyone, to the Trading Foundations version 2.0. A little bit more condensed. We're going to go a little faster. Keep in mind that the first versioning, which is a little bit more extended, is available to you in the content library. The version 2.0 recordings will also be available in a separate section. I'm going to do that with both the Trading Foundations and the Options Foundation. So you'll have plenty of different, right? You may look at both the original and the version 2.0 for any sections that you're particularly working on or struggling with, because they will be different. Today, we're talking about brokerage platforms and accounts, parts 1 and 2. This is a combined. So I basically went through, purged a few sessions that I felt weren't really necessary, added one to another, combined sections 1 and 2. That's how I'm getting us down from 24 to 17. I think we had 24 the first time, or we may have even had 26. It felt a little long to me, like, it's dragging. We don't need this much time. Let's condense it. Let's hit it a little harder and faster. So this is one of them that's doubling up. I'm excited because it is still very good information. As we're going through, let me know. Have you selected your permanent broker? Is your account opened? Are you having issues? And we'll go through it. My name is Scott. I will be your host. Let's dive in. Disclaimers, as always, keep in mind, we are not a recommendation service. Everything we do is for education and information purposes. Any strategies, techniques, or ideas have no guarantee to produce any profits, yada, yada, yada. Okay, and let's dive into the presentation today. I've got it still split into 2 parts. We'll take like a 1-minute break for questions at the end of part 1. Dive straight into part 2. Part 1 agenda, the importance of choosing the right broker. And as you choose your broker, you're choosing your platform. And keep in mind, brokers like, for example, Charles Schwab, they just, acquired, merged with Ameritrade. And in doing so, they got Thinkorswim. That's my preferred brokerage. I'll tell you why as we go through. But they already had I can't even remember, Schwab Trader Pro, something like that. Most brokers have a number of different platforms that are available. So as we look at, what tools, what information, what visual layout are you interested in, that might help you to decide what platform is the best one for you. The reason we don't want to take this lightly is you're going to have to learn the platform. You can't expect there to be sophisticated trading software that you're just like intuitively going to know right off the bat. Right? Think or swim. There's a lot there. You got to learn how to use it. You got to spend some time learning the platform. So if you spend a year getting comfortable with the platform and then you're like, oh, you know what? I don't like this. I want to go here. You're gonna set yourself back a little bit. So for me, better to choose the right one right off the bat. We'll talk about what types of brokerage accounts exist. What type of account do you want to trade in? If you have the ability to do it with retirement money, then you're going to have tax deferred or tax free gains. You might be doing both a qualified retirement account as well as a taxable account, individual or joint. Some people may open a trust account because they're trading within the context of a trust due to their estate planning considerations. We want to make sure you're comfortable navigating trading platforms. We want to make sure you're comfortable placing and monitoring trades. What parts in particular? We want to make sure we're really comfortable and clear with charts, watch lists, and options. And this is just the beginning. We're going to get into the brokerage features in part 2. This is just going to set the tone here. So let's move forward under this premise. The importance of choosing the right broker. Choosing a brokerage platform is a significant early decision in your trading journey. Your platform will serve as the gateway to how you organize, analyze, buy, sell, manage, find, evaluate. I could keep throwing verbs onto this list. We spend a lot of time there. And the more time I can spend in one place, the better. I don't want to have to go into my platform and then go somewhere else for news, and then go somewhere else to look at options, and then go somewhere else to evaluate implied volatility, and then go somewhere else to evaluate options. The more I can do in-house, the better. I do have a few other, you see the other platform. I look at Yahoo Finance. I look at FinViz for searching and for a heat map. I could find both of those on my platform. There are times where I like other tools better, and I'm great. But we want to make sure that we're organizing our tools, and our platform is going to be a significant part of that. We want to be thinking about our investment experience. What fees do we pay? If you're trading stocks, you're not as concerned. Most places these days are commission-free. Trading options, though, not there yet. We're still paying by contract. Typically, you're not going to have an initial starting cost. It used to be you would pay $15 plus $1.50 a contract. That got expensive. I can tell you that right now. So Teddy said, I don't have much choice here. Wish I had TOS, but the best is IBKR. Okay, IBKR. Is that Interactive Brokers? IB? Is that Interactive Brokers? I think that's what yes. Yeah. I would agree. And they do. I traded with them many years ago, and it just doesn't seem like they've made many enhancements since that time. But yep, you gotta YouTube. That's a great resource. YouTube, whatever broker you choose, YouTube, and just say, I forgot what their platform's called. Smart Trader? No, what's their? Anyways, you can go in and find people giving tutorials on their platform. They use the Black-Scholes. Okay. That is a little bit outdated. I'm not going to lie. That's a little outdated. I would have thought at least binomial. Black-Scholes is definitely like the original, but the math it's funny because if you go to Thinkorswim and you play with the numbers, it doesn't change much. It's very, very small, very small. I don't think you would even notice, but yeah, why not make a little noise? Closed mouth don't get fed. All right. We will discuss key aspects of brokerage platforms just to help you make more informed decisions. What types of accounts? The first thing is picking What is the type of an account? Individual, joint? Is it a retirement account, which could be a traditional IRA? It could be a Roth IRA. It could be a rollover IRA. Now, a rollover IRA is considered a tax deferred. So a rollover and a traditional are the same. You can commingle. You cannot combine tax-free with tax deferred. I don't know why I have 401k in here. Typically, you can have 401k brokerage, but that's typically done through your employer. If after you're done with a company, you have an old 401k, I would highly recommend not rolling it into your next plan, but actually rolling it into a self-directed, where you have more control. That's what I would say. Choosing the right account type based on your financial goals and considerations is important to get right off the bat. So, are you trying to do tax deferred or tax free? You know, these are important things. Okay. Navigating trading platforms. If you're going to trade options, don't forget to get an option agreement on file. I think we do discuss this in the intro to options sessions. We will discuss it in the foundations. But if you're going to trade options, you have to fill out an option agreement. On this option agreement, they are going to ask you questions like, how much do you know about options? And you can put anything from I don't know anything till I'm an expert. They're going to say, how much experience do you have? I have a lot of experience. I don't have much at all. They're going to ask your risk tolerance and your time frame. I don't want to say these are trick questions, but these are trick questions. If you don't answer them right, they will not give you trading permission. They'll be like, oh, no, you need more experience. You need more knowledge. You need more. And then they'll be like, go find it somewhere, not here. Go find it. Come back and ask us in 90 days and we'll reevaluate it. And I tell people, look, we live in a time of alternative facts, apparently. So, you know, I say we're a team. You can leverage my experience. You can leverage my knowledge. But you got to be pretty aggressive with what you answer, or they will deny you. And then you'll set yourself back the ability to trade options. That's all. So whatever you're comfortable with, it's an honor system. They don't force you to prove it. What they're basically doing is CYA, meaning if you trade options and lose money, you can't come back and sue them and say, well, I didn't know what I was doing. They're like, well, yeah, you said you're an expert right here. So, and that has happened. So that's where this came from. Brokerage platform overview. You got to make sure you understand the platform. Even if you're on Thinkorswim now, I would highly recommend going in. They have their own videos. There are videos on Thinkorswim, and just spending a certain amount of time each week to further familiarize yourself with the platform. The more comfortable you are placing trades, we've got different order types. We're going to talk about that. First trigger, one cancels the other. I can do a first trigger 3 OCO, which triggers 3 OCO, one cancels the other dependency orders. I have a lot of capabilities, but I need to know why would I need it and how do I do it? You want to familiarize yourself with the interface and the key features. If possible, as you start trading, have somebody walk you through and show you some things based on what they understand about your objectives. Ask them for the resources. What do you have for manuals, tutorials, videos? But we want to make sure we understand first and foremost and primarily analytical tools, and in particular, an options pricing model. Very, very important, critical. Order entry. What types of orders? How do I enter them? Do I have advanced orders available? And portfolio tracking. And obviously, of course, charts. The charts have to be phenomenal. If you don't love the charts, you're going to hate the broker. It's very, very important for you to become familiar with the platform's layout in order for you to be efficient navigating through and taking full advantage of everything that they offer you. Placing and monitoring trades. We talked a little bit about this on our last session. Order types. We have market orders. You should know what they are. Limit orders. You should know what they are. Stop loss, stop limit, contingent, or they're sometimes known as conditional. Those two are very important, but they can be interchangeable. Some brokers call them conditional orders. Thinkorswim calls them contingent orders. They're basically based on an underlying price. So if the stock does X, do Y with my option. The order is contingent upon the stock price doing something. OCO orders, one cancels other. Why would I need that? Well, if I set a limit price to sell and take profit, and I have a stop loss on the other side, if I take profit and that order doesn't cancel, that stop loss order becomes a entry order to the downside. And I don't want that. I don't want old orders floating around, potentially putting me into jeopardy of entering a trade that I don't want to enter. So when I close something, I also want to get rid of the order that was on the other side of that trade. This next point is very important. When in doubt, call your broker. Don't ask me. You're welcome to ask me, and I'll give you an answer. But here's the problem. I'm not on the hook. I'm not a licensed representative anymore. I had my 7, I had my 63, and I could talk about platforms and walk people through and show them exactly what to do. I can show you as an example, as an illustrative exercise, how to place an order specifically in Thinkorswim. But if I show you wrong and you take a trade, that's on you, right? I'm not on the hook for that because I'm not licensed. I'm not your broker. I'm not an advisor or anything along those lines. What I would recommend that you do is get your broker on the line, on a recorded line, so that if they tell you something that's slightly wrong, they are on the hook. And that's important. When I was way back when at Fidelity, we had a desk that I would work on sometimes called trade dispute. People would say, oh, I said this, but it did the other. And it's if our rep, even if the person placed it online, but the rep walked them through, and let's say they explained a stop order, a stop limit instead of a stop loss, and all of a sudden it didn't work right. Well, the fact that the broker told him that erroneously, they're on the hook. They'll make it good. They will give you the money that you lost and put it back in your account. I've seen it and approved it. So very important. Steven said, I have called my broker many times when I am unsure how to place a specific spread trade. Using TOS, they have been very helpful, right? That's their job. They're making money from you. Make them earn it. Yes? Right? Make them earn it. It's very important to develop a routine of portfolio management, right? Portfolio management, section 5 is our routines, our trading plan, and that we use all of the order management resources at our disposal. I would rather automate something if I can, always. If I can automate it, I'm going to. I don't have to rely on myself. I don't have to be there, right? I'm not going to potentially second guess. It's automatic. It's automated. The more we can automate, the more efficiently and the more actively we can trade. The only way you're going to get good at automating orders is if you're very fluid understanding your trading platform, period. It's also important to maintain diversification and risk management within the portfolio. And the platform tool that you have the ability to see your overall platform will help you to do that so that you can see. Now, a lot of times when we think diversification, we think sectors. Do I have a couple of trades in technology, one in software, one in chips? Do I have a couple of trades in communication services? Do I have a couple of trades in financials? And are they in different areas of financials? Do I have a couple? That is definitely some level of diversification, but you can see things tend to move in a correlated fashion. Sometimes that diversification, if you happen to catch the last option session with my friend Gary, the Greeks can help me to diversify, not by stock, but by strategy, where all of a sudden I look and I'm like, oh man, I am really Vega positive, very Vega positive. What's the risk? Well, the risk is, what if the volatility drops? And I might want to say, you know what? I need to balance that. How do I balance a Vega positive trade? I put on a Vega negative trade, right? Simple. Okay, I need a Vega negative trade. Do I want it to be bullish or bearish or neutral? Then I can look at my deltas and I can say, you know what? My delta's at 500. I'm actually quite bullish. I wouldn't mind a little more. So now I'm like, great. Now I want a delta positive, Vega negative trade. Okay. What about theta? The fact that we're talking Vega negative means we're talking theta positive. And all of a sudden, our portfolio steers us to a trade that brings balance to the portfolio. It almost feels like a free trade. And I know we're probably not there yet, but that is what we're working towards. And I promise you, the next time we go through options, I will get us there. I have no doubt that I can. And if you picked up the book, Option Volatility and Pricing by Sheldon Natenberg, that'll help as well. What else? We need to utilize our trading platform for ongoing trade analysis. That Analyze tab, that Analyze tool I use on Thinkorswim, phenomenal pre-trade. Helps me to position size, to understand risk and reward, to understand how time is going to impact my trade, to understand where do I need to be concerned if price levels move against me. I don't do it and then put the trade on and walk away. I'm going to look again tomorrow and then the next day and then the next day. I'm going to maintain perspective on my reward to risk profile, to maintain perspective on my probability of success. So bottom line, it's important to maintain diversification and risk management within the portfolio. Platform tool helps us with that. All right. What else? 3 core elements of our platform that we need to prioritize: charts, watch lists, options. First 3. Charts, you got to have technical analysis. So you need to learn how to set them up, scroll it, zoom in, zoom out, change the time frame, draw some lines, add some indicators, switch from regular candles to Heikin-Ashi candles. Maybe you want to see a line chart. Perspective is everything in technical analysis. So the more comfortable and competent you are navigating through your charts, the better off you're going to be. We need to understand watch lists. How do you create and manage your watch lists? How do we connect our watch list to our charts so that I can quickly and easily pop, 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 and see things without having to type symbols in? And it's going to save a lot of time on our day-to-day maintenance if we can get those watch lists fluid. If I have something new, add it. If it's no longer good, take it off. I want it to be fast and easy. And options. We need to, it's not just the options analytical tools, but let me start with that. Most traders these days should have some level of advanced tools for options trading that helps to assess a strategy and provide a risk profile, a risk assessment. If they don't, find one that does. And I'm pretty sure that IB does somewhere. I'm not sure for my Canadian traders up north. Let me know what's up there, or if there's, I mean, I know Thinkorswim used to be up there because they used to be TD Ameritrade. TD was connected with TD Bank, and there was some, and it was almost province by province. But at this point, I don't know if Thinkorswim is still available. If anyone's up in Canada, let me know what you're coming into. But I also want you to get comfortable with option chains. You got to be able to look at an option chain and find where's the at the money, where's the out of the money, what's the open interest. What does it look like if I'm trying to build a spread? Can I see that in the chain itself, or do I have to start structuring the trade? Again, these are sophisticated enough as far as the software goes. It warrants spending time getting more comfortable and making sure that you have the ability to manage and transact the way that you best see fit. Okay. Here comes an unsolicited recommendation. Don't use Robinhood, press says. It's cost them 25 to 30% of already achieved yet lost gains. I'm going to keep going with the presentation. Press, give me a little more detail. What is it you don't like? I'll tell you this. I remember, this is a terrible story, but there was a guy, a kid, I'm going to call him a kid. He's, I think, 19, college kid, that had a really crazy circumstance around a spread that expired in the spread, which means one option expired worthless and the other one was being exercised. And it was like 10 contracts on Amazon when Amazon was like 750. And essentially the kid thought he was going to have like a $700,000 margin call, and he ended up taking his own life. And it was a really, really tragic thing. And you might think, oh, that poor kid. I had a guy, I remember specifically because I was with my daughter at a soccer tournament. I was traveling. It was in Arizona. And I'm just walking around the fields waiting for her game to start. And I got a Skype call. I'm like, oh, I'm not going to take a Skype call on Sunday. And then it happened again. And then again. He's kept calling and sending messages. The guy's 55 years old, maybe 65. I think he was retired. And he had the same situation on significantly smaller, just panicking because he just wasn't sure what it meant. We don't want to be in that situation, right? We want to be in a situation where we can see what's going on. We can quickly call and understand what's going on. But yeah, press, I'm interested. Give me a little more info on that. Charts, watch list, option analytic tools. If you are not super comfortable, go spend time. Put that on your New Year's resolutions. Okay, taking a quick break. We're going to move to part 2, maximizing brokerage features. So in the second part of this presentation, we're going to dive into benefits and strategies for leveraging brokerage features to help make better decisions with your investments and your trades. Brokerage platforms offer a range of tools and resources that can significantly enhance what you're doing and how you're doing it. My hope is by the end of today, you have a better understanding of how to maximize those features. Okay, TOS has tools for option traders. Robinhood does not. Super simple, no stops, no trail stops, no ability to investigate trade outcomes. Got it. Just limits your perspective, right? Limits your ability to see the whole picture. And if you can't see the whole picture from a reward to risk standpoint, from a time decay standpoint, from a how sensitive is it to changes in implied volatility standpoint, I agree. Your hands are tied. I do not. We're trading. We're going into the jungle here, right? We're going into the jungle. I do not want to go into the jungle with one hand tied behind my back because of my brokerage platform. I need to be all hands on deck, ready to go. So there you go. All right. Part 2 agenda. Maximizing brokerage features, charts, watch lists, option analytical tools, automation through order management, searching and researching, mobile platforms, customer support, and resources. Robinhood took from the rich and gave to the poor. I think it's the other way around with this Robinhood. I think it's the other way around. There's a couple like that. Robinhood, Webull is one. They call them micro investing sites because they give you the ability to buy fractional shares and things like that. But certainly they absolutely have their limitations, right? They are a great intro platform. They are not for sophisticated traders, period. Right? It's just, it is what it is. Okay. We already talked about maximizing. You may as well buy a lot of this. That's true. Charts. Next week, on Tuesday and Thursday, both, we're diving into technical analysis. We're going to be looking at advanced charting techniques. We're going to be looking at candlesticks, moving averages, oscillators. We don't really get into Bollinger Bands. Bollinger Bands, moving average envelopes, Keltner channels. A lot of people love those. I've never been a big fan. I'll introduce them though. I'm going to be reviewing the content for technical analysis, and I'll see, do we want to put something in that? But technical analysis is everything. That's how I make decisions. I can't make a decision without a chart. Even if you're a fundamental researcher and you look into the fundamental information, fundamentals can't give you an idea of when to buy. We need to see price action so that we can see how buyers and sellers are interplaying against each other. Who's in control? What are the levels where it shifts and creates opportunities? Lows and highs, peaks and troughs. It's so critically important to us. But we want to make sure that you have the ability to add these things, change the time frame. You don't like the 50-day, maybe you like a 30-day. You don't like a 14.5 stochastic, which is the standard. I change mine to a 7.3. I like it to be faster and more responsive. RSI is a common one. Common time frame is 14. When I put it on, I like a 2-day RSI. The chart is a tool, and each component of it is you customizing that tool to your perspective. The time frame, the type of chart, the indicators that you use, and then having the ability to zoom in, zoom out, and quickly look through it is super, super important to us. But we want to make sure that you're interpreting the chart indicators and the oscillators to find setups, and making sure you're customizing the charts to your preference. You have to make sure to learn to tailor the charts to suit your unique trading style. That includes customizing timeframes, indicators, overlays to optimize your charting experience. If you watch, I hope I'm setting the standard. I want you to feel fluid in how you look at it. Why would you change your perspective? Why do I go from a regular candle to a Heikin-Ashi candle, etc.? The next thing, and these two should be connected, right? Let me show you for just to kind of get this out there, because I know some of you maybe haven't seen this before. But if you notice here, I'm just in a paper account here. But if I pull this up, and you can see I need to. I have this set up normally on the live account, but I'm going to move this over. If you see this little red one right here and this little red one right here, means that these are connected. So if I come over here to Apple, oh, Apple's getting its teeth kicked in. If I then click here to Adobe, you can see that the chart, I can just pop through here very, very quickly. Oh, look at how old my watch list is. Let's turn that to Meta. Oh, look at Meta. Meta could have enticed you to anticipate today. Anybody? Meta definitely looked good. I forgot about Beyond Meat. I haven't looked at that. It was a high flyer for a while. So we want to make sure that the watch list is connected to the chart. I want to make sure that my watch list is easy to navigate through. We typically only use one, but ultimately I will have more watch lists. So if you see here, I might have high liquidity options. I might then switch to, and this is a market watch, early market watch list, but I want to be able to toggle through watch lists. I might have watch lists with different objectives. I want to be able to sort them so that I can say, let's get these alphabetically. Let's get these by price. So my cheapest, right? I can sort these however I want. I can even, shift them on my own if I desire. So, okay. We also, when it comes to watch lists, we want to make sure we understand alerts and customizations. So I can set orders, but I also want to have the ability to set trade alerts. So if I come in here to Market Watch and I go to trade alerts, I can say, I want to know if Apple breaks back above 185. So I come in here and I say, if Apple goes at or above 185, I want to know. And I can have this come by sound, by mobile, by email, depending on what I have set up in here. And then I can go ahead and create the alert. And now you can see I have an alert in here. So you don't have to set orders to let yourself know when something happens. In fact, a lot of times I'm going to set alerts before I set orders. Because even if it's going to trigger my stop, I don't want it to just stop me out and be like, oh shit, I just got stopped out. I want to be like, oh, look, this thing's 50 cents away from my stop. Maybe I should go look at it and see if I want to just go ahead and bail rather than wait if it seems like it's heading that way. Make sense? Let me know if not. We want to be able to stay up to date on news events. You can have yourself get a trigger if a new news article comes out. That might sound good, but be careful with that one, because a lot of times they just are spitting news, and anytime the symbol is mentioned, you might find yourself inundated by that. So be careful with that one. But we do want to maximize our responsiveness to market opportunities, leveraging these notification features. So what can I do with a watch list? What can I do with an alert? How can I customize it to myself? And now on to one of the absolute, I tell you, at this point, I would have to seriously consider not trading if I lost access to the Thinkorswim Analyze tab, which is their analytical model, or if I didn't have the ability to substitute some sort of an equivalent. One day I'll dig up. I have a spreadsheet from probably 17 years ago, and in that spreadsheet, I had built the Black-Scholes pricing model. And what I would do is I would put in my current price and my target price and my stop price, and then I would have the Black-Scholes model run in the spreadsheet to tell me what my profit potential is, my loss potential, how much will time him. It worked pretty good. Boy, it was slow. I mean, what took me 15 to 20 minutes, I can do in a minute. A minute. I can see everything, understand everything about a trade in under a minute. I can see the whole risk profile. I can see how time is going to impact the trade. I can quickly see if implied volatility is a consideration I need to take into account. I can see what would it be if I hit my target? What would it be if I hit my stop? What's my ratio? Oh, it's amazing. That is an institutional level trading tool. I know, Sandy, the more I describe it, the more you want it, and I get that. If nothing else, figure out a way to get paper. I mean, even if you know someone in America, and find a way to get paper access to it and have ability to use it. I get it. But you do want to see what are the option analytical tools available on your platform so that you can understand theoretical values. You can evaluate different option strategies and do comparative analyses. Do I want to buy in the money or out of the money? Do I want to buy out of the money or sell a spread? How many contracts? What's my reward to risk? That's very difficult to quantify if you don't have the model. Understand how to use risk management tools to protect your capital while maximizing profit potential. Analyze implied volatility and the Greeks. Know what your deltas are. And if you haven't and you have the ability, make sure you're beta weighting. Because if you have a cheap option, it's going to tell you the delta's off the chart. But then when you beta weight it to a standard instrument, what do I use? SPY. I beta weight to SPY. So everything relative to one fixed instrument. And you'll notice that your really huge deltas on cheap stocks shrink. And you're like, oh, that's not that bad after all. Be careful making decisions if you have an unweighted Greek perspective. Next, automation through order management. We alluded to this earlier in the presentation. The benefits of automated trading, including speed and emotion-free execution, are paramount. I still don't fully trust myself, right? I don't know that I should. I don't know if I ever would. The propensity to allow biases, emotions, to let the chimp get to the computer. Chimps are strong and wild. The professor has a hard time keeping them at bay at times. The more we can automate, the less likely the chimp is to start smashing the keyboard. Yeah. Trail stops are dynamic orders that adjust as the market moves in your favor. They are automatic. So, those you don't have to adjust, but I, as an active trader, prefer to do stops that trail. Scott, does everyone understand weighted and unweighted? Again, I don't know if I covered it enough. Let me know if I didn't. But unweighted is just simply a mathematical equation. If I have a delta of 0.7 and I have 20 contracts, it's going to tell me my delta is 1,400. But if that's on a $10 stock, which is 1/50th of the 1/40th of the SPY, that 1400 very, very quickly drops down to 30 when it's set as a relative point. So what it means, if it's unweighted, you're not going to know how much influence does it actually have. It's just an empirical number. When they weight it, it takes cheaper stocks and it shrinks them because they're less impactful. It takes more expensive stocks and it raises it, right? A delta on a $10 stock that's only going to move 50 or 60 cents versus the delta on a $500 stock that's going to move $50. Those are very different things. That's what weighted versus unweighted means. What I would say now, we're not going to cover that in detail. You want to make sure you have the ability. Then you'll come back to the options foundations. And when we get to the Greeks and we get 2 sessions instead of 1, I'll cover what that means in more detail. Okay, and it gives you something to look into on your own if you'd like. Stops that trail are manually adjusted on a regular basis as the stock moves in a favorable direction. They can either be mental or hard. A hard stop is when we're using a conditional or a contingent order. Remember that a hard stop in that form is not. That is what's considered a held order. So some people are a little bit superstitious. They're like, the market maker is going to come and get my order. They're not, but I get it. Sometimes it feels that way. They don't really care about our orders for the most part. But a conditional or a contingent is held. Only the broker sees it. Only the broker's computer knows what your condition is. It's not until that condition is met and the computer shifts that order to the books, then the market makers know. So if you want an order that is not something that the market makers can see, great, put a conditional order. You can do it with stocks, right? If you don't want a stop loss, you could say, I'm going to do a conditional order that says, if the stock drops below this price, sell it at market. It's the exact same, with the only difference being it's held by the broker. It's not on the books. Okay. Both of these order types have pros and cons. As I said, I tend more towards stops that trail, but I will at the end of trades sometimes put a trail stop on, let it go, do its thing. When it's done, it's done. Now, what else? Whoops. Searching and researching. Is it quick? I mean, we can search anyway. I search from FinViz more than I do Thinkorswim. Why? Because the Thinkorswim is so sophisticated, it's easy to overshoot, and all of a sudden you're not getting any results. So I like FinViz for searching. I actually tend to use that more, but there is a very robust search tool that you can do very powerful things with on the Thinkorswim platform. But can I get fundamental data quickly and easily? If I do want to look at ratios, or if I want to look at valuation ratios or growth rates, any kind of things like that, can I get it quickly and easily? Do they have research reports available so that if there's coverage from investment analysts, can I read what they say? Can I grab it and pull it up and be like, yeah, I want to know what they say about it. Let's see if it makes sense. What search tools do they have? Do they have tools to help me put together trades where I can say, hey, what would I do with this? Just to help explore some concepts. Again, this is really important that you have a conversation. You call someone up and say, hey, how can I get fundamental data quickly and easily? Hey, what search tools do you have available to me? Hey, do you guys have research reports? How do I find them? Do you have tools that will help me to, present a couple of trade ideas based on being bullish or bearish on a certain stock? Again, never be intimidated to have a conversation. Sandy, especially you, they're notorious for being grumpy. Just ignore it, right? Just keep calling. Call them out. Hey, are you frustrated that you have to do your job today? Come on, man. Help me out. I don't know. Maybe they've gotten better over the years, but I felt like when I'd call them, it was almost like you were bugging them and you're like, come on, that's your job. Remember, that's their job. Mobile platforms. Couple more things. I know I'm a little over, but we're hitting questions as we go, so this should be good. Mobile platforms. Do they have a mobile platform with the same capabilities? And if not, what's missing? Thinkorswim doesn't. They don't have the analytical tools. You can't analyze using the model. You've got to be on a platform. I can change orders, place trades, cancel and replace trades. I can do things like that. I can do most things, but not everything. And that's okay. I don't need everything. I just need to have mobile capabilities, but I need to understand what don't I have. So that's a question to ask your broker. Hey, what's the difference? What is there that I can't do on the mobile trading app? But you want to make sure you understand how to place orders. You want to make sure how to get real-time quotes, and you want to make sure you can monitor your portfolio. Those are probably the three main things you're going to do. You do want to have the ability to see charts, but they're not going to be as sophisticated of charts, but we do want to be able to see them. Understand the advantages that may have for mobile trading, such as flexibility and accessibility, and make sure you look into the safety. Do they have two-factor authentication? Is it a secure login? Do you feel comfortable? I would say these days most brokers do, but worth taking a peek at. And lastly, customer support and resources. How can you access customer support? Through various channels. Make sure you know how to live chat them if you're on the platform real time. If it's not a pressing question, send them an email. Do they have a 24/7 phone number? If it's not 24/7, what are the hours? When is the best time to call? You may find that you have a 45-minute hold time during market hours and a 5 minutes hold time after dinner. So you might hold your questions off and wait until after dinner to have those conversations. But it's important that you understand the responsiveness of customer support in resolving issues. Lastly, make sure you understand and leverage any educational resources and tutorials. It's not just educational resources about the platform. They usually give good info. Your broker probably has a video on option Greeks. Is it going to be as good as me? No. But is it going to be helpful? Yes. They'll have educational articles and videos about types of spreads. Keep in mind, they're going to be very informational, meaning you do this and you do this, but they're not going to be analytical, right? It's going to be the theory, whereas we're going to focus more on the application. How am I going to use a spread trade? How does it compare to doing a spread instead of just buying an option? Thank you, Sandy. Sandy gave me a true all caps after I said that I'm better, and I appreciate that very much. So yes, make sure you understand what they have, how to access them, start using them. Okay. Next up is technical analysis. What questions do you have? Are your brokers chosen? Any questions about today's materials? I know there's probably some repeat in here, but I have a feeling even if you watch this same session the first time we did it, there's probably a couple of things you're like, oh my gosh, he's right. I forgot to look into what education do they have. I need to call them and ask these questions. If you came away from here with 2 or 3 things to do to make yourself better equipped on your platform, then my mission is accomplished. There should be a couple of things that you do on your own. There should be a couple of things that you call them to find out and have them walk you through. It's a great time. Is there a sweet spot for exiting an option trade relative to days to expiration? I mean, the last 10 to 14 is where it really starts to exponentially see the theta values hurt you. But even then, it very much depends on, are you in the money, at the money, or out of the money? If you're deep in the money or deep out of the money, the last 2 weeks are meaningless. It doesn't matter, right? It doesn't matter. If you're deep in the money, time decay is already almost a non-factor. So whether you wait 1 more day or 10 more days, it's going to have hardly any impact. If you're at the money, it's going to have a lot of impact, a significantly higher impact. So I would say no, there's not a sweet spot, because we have to evaluate what is the context of that trade. Am I in, at, or out of the money? Is the trade still valid? Because if you're there the last 10 to 14 days, the only way I'm going to be in an option the last 10 to 14 days is if it is deep in the money. And if it's deep in the money, that means that the trade is working and worked. So if it's working and it worked, I'm staying in because I think it can still work. So is the trade valid? If you're in the last 10 to 14 days hoping it comes back, something went terribly wrong. And you want to learn. That trade gave you a lot of experience, hopefully. I am using E-Trade. Is there anything you think I should be aware of? I believe E-Trade Pro is their active trader platform, if I'm not mistaken. I haven't worked with somebody on E-Trade for a couple of years, so I haven't seen their platform. I did, there's a chance that they've done some work there. Honestly, Paul, what I would say is, make sure that everything we went through today, just have a checklist. Power E-Trade, there you go. And just call them up. Just be like, hey, I was on a webinar with a guy. He told me that I need to have you help me out. Here's what we're looking to do. They'll say, great, let's walk you through it. If they don't, that gives you information about that broker. If they don't say, I would want that conversation just so I know what is their propensity toward helping me succeed. I haven't had a cause to call Schwab yet, but my understanding is most of the they're keeping their Omaha office. Most of the traders are still coming over from, right? They don't just all of a sudden fire everybody from Thinkorswim and expect Schwab people to know what's going on, right? No way. So I would imagine that most of the people you're talking to are still 5 to 10 year veterans on the platform. I would expect that to be the same with E-Trade, right? Call them up, figure out how helpful are they, what's the best way to leverage them, have the conversation, start checking off some of the boxes here and see where it takes you. Okay, anything else? Oh, I missed this from Sandy. Is it usual to charge for a live feed? Not really. What are they charging you, like $20 a month or something to get real time? Is that what it is for real time? Yeah, I would find out. If you're a non-professional, I would think that they would give you your real-time quotes, but I don't know. IB, you never know with IB. That's a great question. Okay. Love it. That was, you know what? I had to fly through a little bit more. Delayed by 20. Yeah, it sucks to be delayed. Is it, if you're paper trading, that might be it. And if you go to a live, it may be that the live has it. And you might be able to call them and just request where they turn on a live feed for your paper trading for 30 days or 60 days. If it's, oh, it's on the proper platform. Yeah, that's not great. What is maybe they have like an asset requirement before they give it to you? Look into it and see. And look into what the cost is, and then bring it back and tell me whether it's here or one of our regular sessions. Amazing. Next week, technical analysis, still 2 parts. Still 2 parts for technical analysis, still 2 parts for risk management. So yeah. Paper is live, but I don't think they allow you to have both open at once. Oh, interesting. Interesting. Huh. Okay. I actually, I could probably call and ask them and they'd give it to me, but my sim oh no, it is real time. I'm a liar. I'm lying to you. It used to be 20 minutes delayed, but apparently they turned on real time. So, but it was, it used to be. So, all right. It's good to see everybody. I hope you have a great rest of your night. Looking for signals tomorrow? Absolutely, I am. 100%. Looking for signals tomorrow. If we get a pop, the sellers haven't really done that much. Everyone's like, oh, it's come down a few days. So what? We're still fine. We are still fine. I will see you guys tomorrow afternoon to wrap up the week, and then we'll go from there. As always, happy trading.